So I think there are two primary reasons why everyone is talking about Lucid stock right now. Number one is because of the upcoming launch of the Gravity SUV, and number two is the financial performance. So I want to go a little bit more in detail on those two factors here in this video. I want to thank the Motley Fool for sponsoring this video. Visit fool.com/Parkev for the 10 best stocks to buy now. So in its latest quarterly earnings release, the company's management team reiterated its planned scheduled start time for the Gravity SUV late this year. So that sounds like December. And the car, they also highlighted that it's going to be priced at less than $80,000, which is going to be in the range of the luxury SUV market. Now, Rivian has demonstrated strong success in that category. So it's going to be right around the range of Rivian's SUV models, depending on features, of course, and all of that. But in terms of comparatively speaking, that's the market it's going to compete in. And that market has shown more resilience than sedans. Overall, consumer demand for SUVs is more than consumer demand for sedans. So that's the good news. So following that Gravity SUV program, they see another step change in the total addressable market expansion with their mid-sized vehicle, which is scheduled for the start of production in late 2026. So that's their plan, to launch the Gravity SUV. And if they achieve success with that program, they can then launch the lower priced mid-sized vehicle, which is scheduled for late 2026. So this is the trend the electric vehicle industry is working towards right now, with lower priced models coming to market. Rivian is coming out with its lower priced model around 2026. Tesla is coming out with its lower priced model maybe later this year, more likely early next year. And then others have also highlighted that they are coming out with lower priced models. And the industry is realizing that they've pretty much saturated the market for these higher priced SUVs. The EV industry might not grow by all that much in 2024, in the US at least. And so they've pretty much saturated. Everyone that's wanted an EV at these prices has mostly purchased one. And to gain broader adoption, these EV companies realize they've got to offer lower prices. They've got to offer more attractive models, and Lucid is working towards that with the launch of the Gravity SUV. Now, I watched the presentation, the reveal of the Gravity SUV, and it's a stunning vehicle. It looks amazing. All of Lucid's cars, I think, look amazing. They've got one of the better looking EVs in the market, and they've got one of the best technologies in the market as well, in terms of the efficiency of the battery, the range compared to how long it takes to charge. They've got one of the best technologies in that category, and they expect to achieve similar success with the SUV when it launches. All right, so moving on to the second reason why I think investors are talking about Lucid, and it's the financials. And it's not for a good reason, unfortunately. Lucid's financials are in awful to terrible shape. Its revenue came in at $172.7 million in the latest quarter, as average selling prices came down because it had to cut prices because people weren't buying very many of them at higher prices. But the cost of revenue in the first quarter was $404.8 million. So it's losing twice as much as it's even hard to fathom this. It's losing 2x per sales price of each vehicle. So $172 million in revenue, but the cost of revenue is $404 million. So it's negative $230 million in gross profit. So it's losing more per vehicle than its average selling price. That's not sustainable. And that's why the company is in a race against time to develop those new models, because at the current state of the business, it's not sustainable. You can't continue operating a business where when you sell a car for $70,000, you lose $70,000. Your cost of goods are more than double that of the sales price. So it costs you $140,000 to make a vehicle that you're selling for $70,000. Now, I know there's a lot of fixed cost absorption in those cost of goods sold, and if they were to increase the number of units that they produce, the cost per unit would decrease. But the trouble with that analysis would be that if they produce more vehicles, they would just be sitting around in inventory. They wouldn't have buyers for those vehicles if they were to produce more right now. So the only way they can achieve a better cost per unit as a result of greater production is to have cars that people are willing to buy at their respective prices, which right now they will not be able to scale up at current prices because they have the ability to scale up and produce more, but they don't have buyers right now. Hopefully when they launch the SUV, they can scale it up and have more sales. I wouldn't be surprised actually if their sales double as a result of the SUV launch. I wouldn't be surprised if, right now they're expecting 9,000 units sold in 2024. I wouldn't be surprised if in 2025 that rises to around 20,000 if they're on schedule with the SUV and there is no production slowdown or hiccups or shortages or anything like that. I wouldn't be surprised if they can double in 2025. But even if they double, they're still going to be losing money on the bottom line and significant sums. This business is built to be much, much larger than it actually is right now. And that's why it's very important for them to scale up. And so they're saying as they ramp up production and deliveries, they expect the overhead per vehicle to significantly improve. Yes, that's true. But the difficulty is, can you sell those increased production units? Not in 2024, not likely. So in the second quarter, they expect the gross margin to remain flat, meaning to be just where it was in the first quarter with huge losses. As they move into the back half of the year, they expect to build up inventory for the Gravity SUV, and they expect gross profit margin to be even worse in the back half of the year. So these losses are bad right now, and they're going to get even worse before they get better. Longer term, though, they feel that their technology will be a key driver for their gross margin. With scale, they believe that they'll see strong gross margins, with efficiency the key enabler. That's the key, scale. They've got to be able to scale higher units sold in order to generate reasonable profitability. But the trouble is they can produce more right now. It's just they don't have demand for the existing capacity. And so the SUV hopefully will at least double their existing demand. But even at that scale, it won't be enough. Hopefully in 2026, when they come out with the lower priced sedan, that will again be another step up. But yeah, it remains to be seen. It's difficult. You've got to get to much, much larger scale to generate profitability. And demand for electric vehicles is slowing. It's flat year over year. So these electric vehicle companies are in bad shape. And you can understand why a lot of investors are talking about it. There's, a lot of hope and enthusiasm for these newer models that's coming out. But the reality is that the financial condition of many of these EV companies is not very good. Before I let you go, let me tell you about the greatest deal on YouTube. With just a click of a button, you can get free financial analysis from a professor with decades of investing experience. So what are you waiting for? Hit that subscribe button, and I'll see you again soon.